Hello, everybody, and welcome to the Like a Tortoise channel. You can see that I'm quite happy because LVMH reported earnings yesterday, and what a report this one was. And today, I want to tell you everything you need to know about it, and yeah, it makes me excited. Okay, so first things first. Why LVMH? So I already released a few videos on LVMH, and if you have been following the channel, then you know that LVMH is my second largest portfolio holding. So any move either to downside or upside, of course, will move my rate of return. And the matter of fact is that after this surprising report, the stock shot up almost 15%, as you can see right here in my interactive brokers charts. For those of you who don't know what is LVMH and why am I invested in them, I only invest in high quality companies. That's number one. And number two, I only invest in high quality companies trading with a significant margin of safety. And this week I will release another video on my valuation methods, how I go about putting a value on companies. But long story short, per my conservative assumptions, the intrinsic value of LVMH sits at about 800 euros per share. And I was buying this company in the dump when it was trading at $477 per share, marked on the chart. Okay, and my goal was, of course, to continue to add more to it if the company continued to decline. But you can see that my cost basis is high relative to the portfolio, my second largest position, and now, well, we are all well in the money, and yeah, look, I have so I created. Let me go back to our school community right here because I created a full deep dive on this company not that long ago, as I always do. And so, if you want the report where I respond all key questions about the company's fundamentals, management team, growth prospects, track record, and so forth, just leave a comment. Leave a comment, yeah, below the video, and I will definitely send you the report completely free. Okay. So for those of you who don't know what is LVMH, they are the largest luxury empire in the world. So for a company to be high quality, you will notice a pattern across all my portfolio holdings. They are typically number one, number two in their respective industries because they have a wide moat, large competitive advantages. And sure enough, LVMH is the world's largest luxury goods. They now own about 80 prestigious brands, what they call Masons, and they allow each of them to maintain their own identity, heritage, and creative independence. So this is a company that has been around for a very long time, and it's a family-owned business. In fact, the Arnold family right now owns about 50% of the stock, which is incredible. So we are talking about a family-owned business, and that creates many tailwinds for us as investors, if you ask me. Because if the company struggles, you can bet that they will suffer it. They will suffer that decline alongside common shareholders like us. Okay, so skin in the game is what we are after. All right. So let's continue. Let's delve deeper into the report. What caused the price to come under heavy selling pressure? It had to do with sluggish revenue growth, and of course, especially they derive a lot of their sales from China and US, and the Chinese consumer is still recovering from the real estate crisis. Of course, they still have a lot of young unemployment. And then we have inflation, we have the tariff impact, all of that created the perfect storm for the company. And so even a great company like LVMH is not immune to 50% crashes. And when analysts were calling, turning ultra bearish on the company at this level, saying that it could go lower, yeah, I was buying, I was just loading up the truck. Not to say that the company cannot reverse, but remember, over time, the stock will follow the fundamentals, and the fundamentals have been improving, which is very, very good. So let's talk about the report. Revenue performance, 9 months, the first 9 months of 2025, Total revenue 58 billion versus 60 billion over the same time in 2024. So there was a slight decline. A lot of this decline was due to currency headwinds. Okay, but this is something that we cannot control. What we can control and what I'm really focusing on is organic growth. And one of the things that LVMH does is they provide the organic growth, and then they provide organic growth or decline, of course. And then they also share the currency impact if it had any impact. So quarter three organic growth revenue only grew, so only up 1%. But why is this such a big deal? Because it marks LVMH first quarterly growth of 2025 and the return to positive momentum after a challenging start to the year. So this is the first time the company reports revenue growth, however modest, the first time in 2025. So it's a big deal. Why is this a big deal? Because this came as a surprise to the market, and now investors are driving shares higher because they believe this will. This is with this growth is essentially it marks a new paradigm shift for the luxury sector going forward. Okay, and sure enough, we are seeing all companies in the retail space trading sharply higher on the back of these earnings results. So revenue breakdown by region. Same, we are comparing the 9 months of 2025 with 9 months of 2024. You can see that other than Asia and Japan, the other regions showed either flattish or positive growth. Okay, but in terms of trends in quarter three, which is what this report is all about, look at this. Let me zoom in. You can see that there has been an improvement in the United States. So in quarter two, it was 0%. Now it grew 3%. In Japan, in quarter two, it was minus 28%. And now the decline was less intense, right? So only 13%. So there is an improvement here. In Asia, from minus 6% to plus 2%, this is definitely the big story because they derive most of their revenues come from Asia, excluding Japan. So this is a big deal. And in Europe, this is where we saw a slight decline from minus 1% to 2%. Okay, so regional trends improved in quarter three across the board, with only Europe showing a modest 1% decline. Let's talk about the organic revenue change by business group, which is important. And you can see that once again, we are seeing improved trends in quarter three in all business groups. Look at that. Wines and spirits. You can see that from -4, we are now up 1%. Same likewise, fashion and leather goods, which is by far the biggest contributor to revenue. So altogether, this segment accounts for almost 50% of the revenue. It was minus 9%, now minus 2%. Perfumes and cosmetics they are up from 1% to 2%. Watches and jewelry up 2% from 0%. And selective retailing, which is the second largest contributor to revenue, about 18% of total revenue, went up from 4% to 7%. So you can see that overall we are seeing again improvements across the board. Revenue by business group and group overview. This shows you a more detailed overview of the revenue of the revenues by business groups. So you can see that, for example, organic in terms of I will emphasize the largest segment, so fashion and leather goods. You can see that so we saw, where is it? It's only a minus 2% decline this quarter, but it's still down 8% compared to the first 9 months of 2024. Okay, so that's significant. And then you can see that the selective retailing is up organically, is up 3% versus so is up 3% exactly. And This is the first, yeah, up 3% compared to the 9 months of 2024. And you can see that this jumped 7% in this quarter. Okay, that's significant. So this, of course, contributed to the 1% revenue growth that we saw this quarter. All right. So let's talk about that. Fashion and leather goods revenue declined over the first 9 months, but trends improved in quarter three, as we already discussed. In management highlighted the sequential improvement. They mentioned during the earnings call that this was primarily driven by traffic and volume, not pricing. This is very important. Why is this important, guys? Because we want to see that the company is we want to see that revenues are growing primarily because of demand, right? We want to see that people are going to the stores and buying the products. And pricing only works to some extent, but it shouldn't drive most of their gains going forward. So the most of the gains will be driven by innovations that they put out in the new products and so on and forth. And so this all leads to people driving to their stores. That's traffic and volume, right? How much they purchase. Selective retailing, Sephora, for example, Sephora in Le Bon Marché, continued strong performance led by Sephora. Sephora continues to be on an absolute tear, right? So market share gains across multiple geographies, consolidating its global leadership. Yeah, it's interesting because another position in my portfolio, as you know, is Ulta Beauty, and Sephora has become the largest competitor in the United States because Sephora partnered with Kohl, I think, in the United States, and they are a, they are they are a fierce competitor to Ulta Beauty. So it's something that I'm going to have to pay attention. So it's nice to be exposed to Sephora via LVMH. In terms of watches and jewelry, companies like brands like Tiffany and Co, Bulgari, Tag, you can see that they achieved organic growth over the first 9 months of 2025 with plus 2% in quarter three. Perfumes and cosmetics, brands like Christian Dior in Guerlain. By the way, within Christian Dior, Sauvage remains the best-selling perfume in the world, which is fantastic to see. Stable revenue on an organic basis with the quarter three improvement. And last but not least, wines and spirits, slight organic growth in quarter three, despite earlier declines. So very positive. I would say the main highlights include first quarterly growth of 2025, right? So we have 1% organic growth. That's organic. Negative currency headwinds, which continue to weigh on the company. Okay, but this is something that we cannot really control, and so I don't think this is going to be. I think this is more a short to medium term headwind, but certainly not something that is going to dictate how successful the company is going to be in the future. Resilient. And that's another reason why I like LVMH. By the way, going back to this is because LVMH is as a diversified portfolio across different regions, which will create it creates some stability across the portfolio. Resilient local demand across mature markets, namely China. This is very important. Improved performance, China and Southeast Asia. Throughout the conference call, they mentioned Southeast Asia as well, so they are improving substantially there. Improved performance in wines and spirits and Sephora. Ongoing innovation and brand investment. We will talk more about this, and then focus on efficiency, quality, and selective investment. So let's talk about these things in further detail right now that we are going to cover the conference call main takeaways. So, number one, in terms of pricing and US tariffs, many analysts ask management about pricing and US tariffs. And what management says is that sequential improvement in fashion and leather goods, for example, came mostly from traffic and volume, not price, as we already discussed above. So pricing in quarter three actually was largely unchanged from quarter two. So it's not that the company was raising prices, yeah, across the main segments. No, it was primarily traffic and volume. Very good. What about in terms of regional outlook? They say that tougher comparable sales ahead in Asia, Europe, and US, but easier ones in Japan. This makes sense given it makes sense given the well. It makes sense given how strong this quarter has been. So yeah, it makes sense that things will that we will see tougher comparables going forward. All right, for these regions. 2026 H1 expected to benefit from easier year-over-year comparisons. In terms of China commentary, many people asked about China as well. And what management says is that the company sees stabilization in China. They say that tourism spending by Chinese consumers is recovering, particularly abroad. However, they also pointed out that domestic macro headwinds still persist. And I'm excited about the China situation because, as you know, LVMH is a luxury empire. And I think what they are what they are saying essentially is that even though China headwinds, even though China's macro headwinds persist, right? Because there's still, as I mentioned, a lot of unemployment. There is still some, the consumers are still pulling back on spending, but ever so slightly, we are seeing a gradual improvement. And this tells me that these results are actually going to bode well for other companies in our portfolio. For example, Lululemon, because they are growing a lot in China and they are a premium retailer, right? So they are a premium apparel retailer. So the fact that the Chinese consumer is slightly perking up can bode well for the company. And also Alibaba, of course, Alibaba, because Alibaba with the Taobao and Tmall should benefit. In fact, will definitely benefit from this as the consumer starts spending more. So I like that as well. In terms of investments in cost discipline, what they say is that they reiterated their long-term focus on brand desirability and retail excellence over short-term margin protection. What she said, the CFO, which I really liked, is that, guys, we always try to balance cost discipline with investments. And while it's important to remain to of course to go ahead with with disciplined capital allocation, we cannot deviate from making investments that will allow our brands to stay competitive and to grow into the future, right? Even though we might be in a down cycle, which according to what they say, they still are. So they continue to invest through cycles. This is a down cycle still, okay? But whether they are in a down cycle or in an up cycle, investments are necessary to stay ahead of competition. But again, and she says that cutting those investments will probably be good over the short term, but it's not good over the long term. All right. So for in one of the best ways to show you that is by what they're doing with their store network. So for example, they mentioned that 30% of stores have been renovated, and they say that newly renovated stores are outperforming legacy stores. But this is very costly, but they know it's going to create more value in the future. So it's disciplined capital allocation, and we will be able to see if that is the case via our metrics like via capital allocation metrics like ROIS, right? Return on invested capital. In terms of margins, very good. So she mentioned that to reverse gross margin deleveraging, LVMH needs to return to sustained growth, and that will only happen in an upcycle. So as as the world starts to spend more on luxury items, then we should see an improvement primarily in gross margins. Okay, but that of course will have implications across the other margins as well, right? and then will feed through the other margins. Now, pricing strategy in the US, as a result of tariffs and in high inflation expectations ahead, they are planning for moderate price adjustments only if inflation or tariffs warranted, because they say that the emphasis should remain on mix and perceived value, not aggressive pricing. Very good. What does that mean? It means that LVMH is committed to delivering value and quality to their customers. That's number one. And they will not increase prices without increasing quality, right? Even though they will have to increase prices on the back of tariffs and inflation, that will be accompanied by an increase in quality and value. Very good. All right, very good, because they are a premium brand. And and then, so what's my overall take? LVMH quarter three report marks a turning point for the luxury sector after months of stagnation and market pessimism. This quarter showed early signs of recovery, particularly in the US and Europe. Strong results across business segments offset softness in Asia and currency headwinds. This growth may appear modest, but it's symbolically significant, signaling that the world's largest luxury empire may be turning the corner. That's why this is such a big deal. So I'm very pleased with the report because it reinforces why LVMH remains a core holding in my portfolio, a business with unmatched pricing power, global brand equity, and discipline in long-term value creation. It's not every day that you get to buy a company like LVMH trading at after trading at 50% of its all-time highs. So I was very happy with that. And this is a company that, if I'm not mistaken, this is a company that I will gladly own forever. It's a family-owned business. Provided the fundamentals don't deteriorate, I'm more than happy to let this company grow. Of course, valuation would have to detach would have to detach itself significantly from fundamentals for me to pull the trigger on the sell button. But yeah, unless that is the case, I'm happy to be a long-term shareholder. Of course, in fact, that's what I preach here in this channel, and that's what I hope you guys are doing. So very happy with this report. So it marks so it's the first company now in my portfolio that reports earnings, and it was a strong and convincing beat. So if you are invested in a company and if you bought at the same levels as we did, congratulations to you guys. And I will keep you updated on further developments because two other companies are reporting this month in the two companies in the portfolio, and that includes PayPal and Evolution AB. So I want to see how things are playing out on that front. Okay, so very good, guys. If you liked it, just to share it, share the video with people you know, relatives, friends, and smash the like button, and let me know in the comments if you really like it. If you want me to put out more stuff like that, it really helps the channel. Cheers, everybody.